Kia ora koutou. Thank you for joining us. I'm Michael Metzger from UniSaver, and today we're going to talk about growth lower carbon, the new investment option that we're introducing in April. And to answer your questions, which thank you, we've had well over 100 come through from members who've emailed us and been very helpful in us understanding just what it is that you want to know about the fund. Joining me to help answer those questions is Toby Daglish, who is Head of School of Economics and Finance at Victoria University. He's also a UniSaver board member. And joining him is David Kenjiora from Russell Investments. Russell Investments is our consultant and manager, and they're the ones in the hot seat that manage your investment funds. So let's get started with the makeup of the new option. Growth lower carbon is split 80-20 between growth assets and income assets, specifically global shares and global bonds. It's using two of Russell's funds, the Sustainable Global Shares Fund ex Fossil Fuels and the Global Bond Fund. So UniSaver already invests some of its money in the Sustainable Global Shares Fund. What's the difference between that fund and this additional fund that'll be coming on board?
Sure, thanks Michael. When we're looking at it, so like you say, there's already an investment in the Sustainable Global Shares Fund that's looking to take, in its decarbonisation strategy, it has a 50% reduction in fossil fuel reserves relative to benchmark. It's also got reduction in carbon intensity. When we're looking at the ex-fossil fuel option, that just takes it up a little bit further. So that's seeking to have 0% exposure to fossil fuel reserves, companies with those, and also to exclude companies involved in, have a large degree of revenue from fossil fuel activities. So that might be like oil and gas exploration.
Sure. And what about the Global Bond Fund? Is that fossil fuel free?
No, I wouldn't consider it fossil fuel free. It does have its own green targets. So the Global Bond Fund does seek to have a carbon intensity about 80% relative to benchmark. So it is greener than benchmark, but I wouldn't consider it fossil fuel free.
Okay, so if it's not fossil fuel free, why go 80-20 and not just invest 100% in the shares fund?
Well, we're thinking of this as being a growth fund rather than an aggressive fund. So a typical growth fund has about 80% growth assets and 20% defensive assets. So we're trying to make this sort of comparable in that risk profile with the existing growth option.
Sure. And so is there a plan down the track perhaps to introduce a balanced and a conservative version of the lower carbon option?
Well, obviously rolling out these options costs money and time, and so we've decided to start with the growth option. We felt that would appeal a lot to some of our younger investors, and it's also possible, as we'll talk about later probably, to ratchet down the risk if you want to try and achieve a lower level of risk, whereas it's difficult to ratchet up risk. So that's why we decided to start with growth.
Sure.
Possibly further down the road, if we have good take-up on this, it would be feasible for us to roll out a balanced option and or a conservative option.
Okay. So just continuing with exclusions, a number of members have asked whether the new fund is entirely focused on reducing carbon exposure or whether it has a broader set of exclusions. I think for this we've got a slide to help explain the differences.
So all of UniSaver's products exclude investments that would run materially contrary to New Zealand government policy. So all of our products would exclude tobacco, anti-personnel mines, cluster munitions and nuclear weapons.
Okay. And as well, and perhaps to explain to members that global shares are the biggest asset class for the fund. Around 40% of the fund is invested in global shares, and already half of those are invested in the Sustainable Global Shares Fund. What are the additional exclusions, David, that included in that fund?
Yeah, so like you mentioned, there's some additional exclusions for the Sustainable Fund. So it's mainly looking at things like excluding companies with exposure to uranium mining, might be also controversial weapons, coal power generation in terms of thermal coal, also companies breaching the UN Global Compact.
Okay.
And then, of course, the new fund, the fossil fuel-free one, also excludes fossil fuel reserves.
Correct.
And oil and gas exploration.
Right. Okay. Excellent. So that's the shape of and the makeup of the fund. One of the most common questions that we've been asked is around performance. Obviously, members want to have some understanding of how this fund might shape up against the current growth fund or growth option. Again, I think we've got a slide to help shed some light on this. Toby, you want to work through it?
I mean, if you have a look at the slide, one caveat needs to be given, which is that for the earlier data, we've had to report the benchmark for the index for the fund, because the fund's only been around for a few years. So some of that earlier data is benchmark being compared to the existing growth fund. But you'll notice that over the long time, sometimes one fund does better than the other, but generally, on average, we'd kind of expect them to perform at about the same level because they've got a similar mix in terms of growth and defensive assets in them.
Okay, so you know, sometimes they'll be quite similar in terms of the return. Sometimes there'll be a difference, but you'd expect over time for it to even out somewhat.
That's right.
And I suppose another caveat here is, you know, that past returns and, you know, no indication of future returns.
That's right.
So, you know, looking at this construction of what's happened over the last 9 years doesn't mean that that's setting up a pattern for what might happen over the next 9 years.
Exactly.
Yeah, I think you had that on your graph as well. Obviously, the fund wasn't in existence, so a lot of the data that had to be given in terms of historical data has had to come from benchmark data.
Yeah, okay. Toby, one of the questions that came in was around the unit price. Someone asking what will the unit price be for growth lower carbon on day one, which, you know, I thought it might be worth just to take a minute to explain the unit pricing and how that works.
Certainly. So when the new product launches, it will have a unit price of $1. So, you know, you'll buy into it for $1. Think this is somewhat similar to a share price. As the fund starts earning returns, that will hopefully grow. You know, will go up and down as the returns, depending on whether they're positive or negative. One thing to keep in mind is that obviously it will take a little bit of time for money to flow into the fund, and so we might see for the first day or two that price doesn't move because people's money is sitting there waiting to get invested. Okay.
Well, definitely the most common question that came in was some variation of, is this, you know, fund going to be appropriate for me? And, you know, questions around risk return and how, you know, given their age, and I've got a couple of representative sort of questions here. One, I'm extremely enthusiastic about this kind of thing and would normally go for it 100%, but I'm 61 already and this is fully a growth fund. So what would be your comments on that?
Well, so when you're investing earlier in your working career, you've got an ability to replace poor returns with potentially saving more. Once you get a bit older and you're looking at being a few years out from retirement, you don't really have that option open to you. So quite often, as an older investor, you would generally opt for a more balanced or conservative combination of assets.
Okay, and then you alluded to this before, but you know, if you're at the point where you're thinking, you know, for whatever reason that you want to be taking a more conservative approach, how might you
go about that?
Yeah,
so certainly there's a couple of things you could do. You could invest in the growth lower carbon fund, and then you could combine that with either the balanced fund or the conservative fund or the cash fund. Now, of course, if you went for the balanced fund to combine it with the lower carbon option, or you went with the conservative fund, you need to be aware, of course, that that's going to invest in other equity products other than the fossil fuel free one. So you are going to still have that higher carbon exposure and intensity.
Okay, so it's not possible to mirror the current options,
no,
but there are ways to reduce the exposure to growth assets if you wanted to.
That's quite correct.
Okay.
And of course, there's the potential that further down the road we could indeed offer a balanced or a conservative option.
Okay, yeah, over time. Quite a number of questions came through around UniSteps. So UniSteps is what we call a glide path option that the investment mix changes automatically as you get older. And a number of questions coming in as to whether from members who like the UniSteps facility, but also like the idea of growth lower carbon, wanting to know whether they can retain, have both.
Unfortunately, at the moment, that's not going to be possible because the UniSteps product effectively moves the members' money starting out mostly in the growth fund, migrating to the balanced fund, and then migrating from that mix to gradually towards the conservative fund. But given we don't have a lower carbon balanced or lower carbon conservative fund, we aren't at this stage able to offer a UniSteps version for this.
Okay.
I might just add to that, just thinking about the existing offering when you're talking about UniSteps, to not forget there's that 50% global equity exposure to the Sustainable Global Shares Fund already. So you've already got the that 50% reduction in carbon emissions and fossil fuel reserves sitting within the existing option.
Yeah, which is if you think of the name of the new fund as Growth Lower Carbon, lower because the existing offerings have also got a reduced exposure to carbon intensity. So I get related. I mean, you've alluded to this, but I think it's an important question to be really clear about is around, can I split my payments between investment options? And the answer obviously is
yes.
Yes.
One thing that you might want to be cognizant of there is that you can split your money between the options, but then as they start earning returns, you may not necessarily have the same mix of assets between them. So it may be prudent for you to maybe once a year or something check in on your portfolio and rebalance. So if you were, for example, trying to have a 50-50 mix of cash and the lower carbon option, check in at the end of the year because it may have drifted, for example, more towards equities if equities have done well, or more towards cash if equities haven't done so well.
Sure. And the point that you just made, that you can split between the options but not UniSteps.
But not UniSteps,
you
of course,
can't mix and match.
That's not part of the choice.
And a question that came in is someone wanting to know whether they could invest in the current growth option and growth lower carbon, that could split across the two. And if they want to, that's definitely a possibility. Another question came in from a retained member. I'm retired and I no longer make contributions to UniSaver. However, I'm a retained member. Is the lower carbon option available to me?
And of course it is, as all the options are available to retired members.
Yeah,
retained members.
So retained members can switch investment options at any time.
That's
and
great.
The first switch each year is free, and there's a fee for switching after that. Now, I'm just going to take some questions that are coming in. Where can I find detailed information about the ex-fossil fuel fund holdings? So, a couple of things here. The exclusions are explained specifically in the product disclosure statement for each of the investment funds, correct?
Correct. Yeah. Also, the methodology about how they might go about, what's important to the fund and how they'll go about it.
Okay.
Which is up on the Russell Investments website.
Okay. And then probably another point to make is that for the holdings for UniSaver portfolios are published on
the UniSaver website.
Our website and updated each quarter. And when the new option comes on board, we'll be able to publish holdings for that option as well. So that will kick in.
That's right.
Okay, so there's a question here. We've got perhaps explain the term first, but around greenwashing as a general concern. Toby, what's meant by the term? And
greenwashing is when a company or an organisation makes fallacious or vacuous comments to allude to the fact that it's undertaking some environmentally friendly practices, when in fact these are just, I suppose, cheap talk.
Okay. Again, we've talked about transparency and that we, publish the securities that the scheme invests in at any time. Perhaps, David, you could talk a little bit about, Russell's processes around, assessing and monitoring the companies that it invests in.
Yeah, well, obviously we've got our portfolio managers looking at the securities they hold pretty frequently. We've also got an active ownership team, and their responsibility is around engaging with a lot of these companies. They might be, doing the active investment stewardship side of things in terms of voting proxies, trying to influence outcomes. And we publish a lot of that data in our stewardship report that hopefully be coming through. We've just started a new one fairly recently that details everything that we're working on, how we engage with companies, sort of the outcomes we're looking to achieve. And we even break that up between, which outcomes are E and ESG focused, which ones are S and which ones are G, and how we comply with the New Zealand Stewardship Code.
Right, okay. Can you please say a bit about the difference in hedging risk associated with the ex-fossil fuels fund versus the mix of equities in the current growth option? So perhaps explain again, about hedging as a concept.
I don't know, we've got a slide that might be relevant here.
Yeah, I think that might be a good way to start it, actually.
Pop that slide up.
And I think that was coming through too when the person was asking about if I invest some in growth and I invest some in lower carbon growth. That it's important to understand is the funds they're broadly similar outcomes in the long term, but they're actually quite different products underneath. And when you have a look at that slide, you can sort of see the constituent components of both those funds and why they're a little different.
Sure.
So to touch on the hedging.
We've got that up now, so work through that.
So maybe we'll just work through that and touch on the hedging specifically when we get to it. Obviously, if you have a glance at there, you'll see that there's quite a range of different securities in the conventional growth option. And when you look at the lower carbon fund, there's really just the two products, the global bonds and the global equities ex-fossil fuels. In terms of the investment in equities, with the conventional growth fund, we hedge half of that risk. So that would mean that we enter into forward positions to lock in what the exchange rate's going to do. Now that can be a mixed blessing. Sometimes the exchange rate moves in your favour and sometimes it moves against you, but we get rid of half of that risk for the equity component in the conventional growth fund. With the growth lower carbon, there isn't any hedging going on with the equity component. Again, that could work better, could work worse, depending on which way the exchange rate moves. The other sort of key difference between them is in terms of the equity component. For the conventional growth fund, it's split between, the equities are split between two products. One of them is is straight up global equities, and the other one is the sustainable fund, which the sustainable fund is passively managed, so it just tries to follow an index, whereas the other portion of the equities is actively managed, so it's trying to beat the index. Whereas in the case of the growth lower carbon, all of that equity exposure is passive. And as a result, when you come down to the final fee structure, it's a slightly cheaper option, the lower carbon.
So, all of these things are differences that the growth option and growth lower carbon are quite different in their makeup and have different characteristics that will affect performance, not just the absence of fossil fuel.
That's correct. So you're going to be exposed to the difference in the assets that have been allocated in the equities. You're going to be exposed to more exchange rate risk, which again could go either way, and you're going to have that difference in the active and passive. And as noted, you're not going to have investments in infrastructure or investments in property, investments in high yield bonds.
Yeah.
And I think once you do that, you're obviously going to have a much more volatile product. So we see long-term outcome, you're probably broadly similar outcomes in terms of the growth products, but for growth lower carbon, it's likely to have a much more volatile time. And that's mainly due to, taking out those diversifying asset classes around infrastructure and property, like you're saying. It also doesn't have that New Zealand exposure in terms of New Zealand equities and New Zealand fixed income. So again, that kind of offsets things a little bit. And then also by not having it hedged, the hedged product, for the existing products, you'll generally get that pure exposure to the asset class. Whereas if you've got an unhedged product, you're going to be sitting there and currency is going to be a major part of your return. So again, that would all lead to growth lower carbon being a bit more volatile over the short term.
Sure.
And that's what we saw when we looked at the past performance, right? There were some years where this did better, there were some years where it did worse, very few where it would be exactly the same.
But overall, you've got 80% growth assets, 20% income assets. So broadly, you would expect over time a similar outcome.
That's correct. And let's reiterate that this global equity, global sustainable ex-fossil fuels is trying to follow the same indices as our existing funds.
Okay. I think that, we've covered, we talked a bit about, is this fund right for me? And, I think, is this the sort of thing that really someone, if they're unsure about what they're doing, they should be looking at getting some financial advice?
I think that's always a good idea, right? That getting financial advice, if you're thinking about making a change in investments, is a sensible move.
Yeah. And actually the Sorted website's got quite a bit of help in that direction. And I think it's worth going on to the sorted.org, and if you search financial advice, I think there's information there about how to choose a financial advisor and on this topic, because it's an important decision.
It is.
Yeah. So any final comments or thoughts that you think of that might be of interest to members? I think
that's the main thing. So I guess for us, the main takeaway is the growth lower carbon's not the existing product with fossil fuels sucked out. They are quite different products.
Yeah.
And you've got that slide there, which is quite useful. So the existing product is highly diversified, and that has an influence on returns. And the growth lower carbon is a little bit less diversified. So again, both with the hedging strategy and the lack of the other diversifying asset classes, you'd expect that volatility. So it really will be, they will have different returns, and people need to be conscious of that when they're looking at peer group returns, because they will differ. Right,
sure. And Toby?
Yeah, I think it's just worth maybe sort of reiterating the whole thing. You've got a new option available in the form of this growth lower carbon. As it stands, it's probably a substitute for the existing growth fund. It can be combined with the other funds if you want to achieve a lower level of risk, and there's potential in the future that we could see other versions of the lower carbon fund.
Right, sure. And again, get some advice if you're unsure what to do, and we'll continue to update the website with information about the option, including greater detail about exclusions. And of course, the big question that some will be asking is, when is this happening? It's will come on board on the 30th of April. There are two ways that you can switch to the new option, or some of your funds to the new option. You can fill in a form, download a form on the website that won't go up until the 30th of April, or be available from that day. But the easiest way to switch, if that's what you'd like to do, is to log into your account and follow your nose, and you'll find the investment switch option there, and you'll be able to make your choice and submit it online. So that's April the 30th. Thank you, Toby. Thank you, David, for your input and for answering the questions that have come through. And enjoy the rest of your day, and thanks for joining us. Ka kite anō.